Welcome back, and we're joined in by Sachin Relekar, who is, I beg your pardon, who is Senior Equity Fund Manager at Axis Mutual Fund. Welcome, Sachin. Sachin, let me start off by getting your view with regard to how you're viewing the market right now and what exactly should an investor do, or how exactly should one think of it. We've seen a fall and we've seen a very decent recovery thereafter. So how should one play it now?
I think the backdrop is likely to be volatile. Geopolitics is going to continue to evolve. Plus, I think what we have seen in the recent past is trade uncertainties. And of course, there is a technology thing which is also developing quite fast and a rapid pace. So these two, three broad macro, which are actually cutting across the global landscape, will actually create a lot of volatility around it. And I think that is something which needs to be kept in mind. But at the same time, I think the policy environment domestically remains very stable. And if you look into the context of the macro volatility as well as the policy environment, which I just spoke about, I think there are clear trends also around that, which is basically the domestic macros are stable as such. Although there is a currency volatility, which is a clear offshoot of what is happening globally, but there is a clear focus on domestic manufacturing. I think the energy transition trend is very, very strong and it's very structural in nature. And financials per se has brought a lot of brunt of this volatility. But I think the balance sheets, the asset quality backdrop over there is pretty strong. So we are getting into a cycle which might be a little bit unstable, but the balance sheets, etc., are very stable. And therefore, I think these are the spaces where investors should keep looking for. And over the long term, I think these things should play out quite well.
Sectors, Sachin, what are you looking at from a structural long-term standpoint?
So in broad sense, we are quite positive on consumer internet as a place. We are also quite positive on domestic manufacturing, which is basically consumer electronics as well as a lot of defense plays which are there. These are the two, three broad areas where we think a lot of potential can emerge going forward.
You said consumer tech, right? So the likes of the likes of platform companies, where you believe that it's going to be like a multi-year kind of an investment horizon.
Yes.
But take us through the thesis of that. Is it just the size of the addressable market? Are there specific stocks or characteristics within the companies that you see?
See, first of all, I think as you also pointed out, the market or the target market opportunity is very large. These companies are actually gaining quite a lot of space in that. And the traction over there is quite large because consumers are adapting to it very fast. The issue around some of these business model is, as of now, is actually the competitive landscape, which is very intense. I think each company will find niches, and because of that, the profitability which will emerge will be substantially higher because they will go through this inflection point. And one thing which is structural in nature is I think the consumer habits have impacted. People are adapting to this, and again, it goes back to the large size of it. Plus the capital efficiency in this sector, because these are some of these platforms are, so to say, are not as capital intensive as perhaps the traditional businesses which are there. So once the profitability comes through, the capital efficiency of these businesses can be sharply higher, and then they can generate a lot of cash also. So just driven by this technology transformation or the technology adoption at the consumer end, as well as the businesses also are harnessing all the efficiencies which are coming out of that. I think that is an interesting space to look at. But this is something needs to be seen through on a structural basis. As I also pointed out, that this is more long term in nature. We'll see over next 3-4 years or slightly longer also. In certain cases, the profitability in these businesses can be substantially higher, and that is something which we are. And this is also structural in nature. I don't think this is something which will get impacted by the macro volatility as of now. What we are seeing through.
Tactical bets, Sachin, in an environment like this. Let me just throw in an example, and purely from an example standpoint, I'm not trying to put stocks out there, but something like an LNT, it fell from 4,400 to 3,000, 3,300, 400 types, and has now surged back higher. Any such plays that you're looking at, and any such spaces tactically that are looking good at this point?
I think, as I also started saying, the volatility around all these macro things are going to be quite high. Even though we are now seeing some kind of some kind of a peaceful phase which is developing, but as you can see, this is not just one place. I mean, there are a number of other trends and counter trends which are also going through. So this is now, I will really not advise people to think about something from a short-term point of view, especially in the domestic market, because while things are unstable from a medium and long term, medium term or a near term point of view, there are also structural trends which are actually should be focused on. And there are a number of things I pointed out at two or three things, but there are likes of CDMO, which is pharma contract development and manufacturing space. Then there is a defense manufacturing opportunity. These are all there. I mean, they can continue to play on for quite long time, and I think that is something which needs to be focused on. There is also a big trend in energy transition. All this entire AI tech, which we are talking about, has also an element of energy transition and energy intensity per se. And a lot of investments will happen around that. There are interesting businesses which are positioned to take advantage of that. I think that is something one needs to focus on rather than trying to be tactical about it, because what is happening is these trends are not only very sharp, but the directionally also there are a lot of things which are actually changing a little bit here and there, and that's where I think the tactical positioning will get hurt. And anyway, the equity should not be looked from a shorter term point of view. Otherwise, you are basically missing on a larger picture also.
Interesting. The financials, Sachin, we've not spoken about that, and it's tough to kind of stay away from financials right now because they're at nearly more than a decade lows, especially among the large private sector banks and the like. Anything looking interesting, or what's the most interesting part of the financials that you would want to play, if at all
I
you would
think
want to play?
one of the factor which you only pointed out is they are actually valuation wise, it's a very attractive space now. I don't think valuations are demanding anymore over there, and especially in a phase where you don't have a asset quality as a drag, as in most of the balance sheets are very clean. Even in microfinance, we are not seeing incremental deterioration. Unless this macro kind of worsens, we might see some of these things. But at least going into the phase, the asset quality backdrop is quite strong. It's a question of what are the margin pressures they might have because of the perhaps the rupee will play on the yields, etc., or what kind of growth adjustments will be there. But I think a lot of that is actually reflected in the prices, as I said, the price to book value ratios or price to multiple ratios, earning multiple ratios, also not like demanding. So that's an interesting space, and a lot of business models are well understood and well known, and they are perhaps the best managed companies also are available at not so high multiples compared to what they used to be. So this is of course a space. We also have a very large allocation over there, and there's a lot to choose from. So one really not need to go down quality curve over there. This is something which is a very I think easier thing to be looked at. It just need a time horizon. I mean, it may not like play out in a very short term, but I think over a medium term, like 3+ years, I think this is a good space to be in.
Mm. And with regard to infra, would you stick to the largest name? Would you go down the curve there? Would you look at niche players, or would you not touch it?
I think infra is, as I said, lot will happen, and lot will happen around energy, because that is something which will build out quite a lot, and therefore you also have capital goods play over there, and you also have a pure infra play. If you go too much down the line on market capitalization per se, or likes of construction companies, etc., that is something which we are a little bit skeptical about, because the competition intensity is quite high over there, or through cycle these companies does not generate as much cash. But larger companies do focus on higher in value add kind of projects, and that's where they create value. But I think capital goods is an interesting space, and there is an automation, there is an AI data center, all those places are available, and that's also a wide space, by the way. So there's something which we are looking at.
Sachin, how should one look at metals? Because again, that's along with energy, that's one sector which is completely, in a different zone from the rest of the market. I mean, it's continues to notch 52-week highs and sit there and near record highs. What to make of the metals basket now? Where are we in the cycle?
So industrial metals broadly is divided into ferrous and non-ferrous. I think ferrous, there is a clear government focus that we should have a domestic manufacturing capabilities, and our steel demand is quite stable and steady. And therefore, there is a minimum import prices, etc., are also been stated out. And there's clear intent that the domestic reliance should be higher. I think that is one sector which is clearly telling us that the predictability of that and slightly long term path also is quite good over there. Moreover, metal is a sector where there was always been a leverage issue, but I think post COVID, I think all these companies are actually balance sheets are quite lighter, and there's no leverage issue per se, and capital expenditure is also happening through a lot of that is actually supported to the internal accruals. So that is a sector which is perhaps at least on the fairer side is quite set for a steady compounding sort of a thing. We are not banking on like steel prices actually having a large inflationary bias, but it will have definitely a very good utilization from a company point of view. So they can actually generate a good capital efficiency over there. So we are quite constructive on that. On non-ferrous, I think not very large number of basket or number of plays which are available, very limited number of plays which is there. But as such, from a structural point of view, something like aluminum has a very good demand and supply equation, even from a medium to long term point of view, not just the recent disruption which has happened in Middle East. I think that is something unpredictable. They can restart, these capacities can come back online, but over a long term, in 3 to 5 years, because the metal usage is likely to be very strong and supply tightness is likely to continue. I think that is also a space which will be very well balanced. In fact, in certain cases, the aluminum is likely to be in deficit also. So that is also a sector where earning predictability from looking from now onwards is actually quite decent. So this is not a sector which, unlike in the past, which has a very sharp volatility in both ferrous as well as non-ferrous, it is unlikely that we'll see the sharp volatility. It's much more predictable now.
Okay, if there was one idea, Sachin, one stock idea, one sector which stands out for you at this point, which becomes a hot favorite, what would that be? And what would the one idea be which you wouldn't touch at all at this point? You just completely avoid, probably just sell.
In terms of the sector, as I said, I'm quite positive on consumer internet as a space and as a sector. Then there are a number of things to look at. I don't think there is a dearth of ideas. Everybody can look at different niches which are there, and maybe that is something which one can position for. In terms of where you don't want to be, I think what one needs to look at is where the ability to pass on the price is now difficult. I mean, that is a sector because I think when we are talking about metals being well balanced, metal demand supply being well balanced, we're talking about geopolitical uncertainty and all those things. I think we are also thinking about some kind of inflationary trends developing into the economy. Therefore, any space where ability of the companies is not very clear in terms of passing on the prices, I think that is something one needs to be very wary about. Rest of the places, I mean, then it actually, as in, because it's about clarity, so this is something which I'll stay away from, where pricing power or competitive intensity is so high, and the ability to pass on the price hikes is just not there. These companies will suffer from some kind of a margin erosion. But where I would look at is something where business models can go through inflection point and can address a very large opportunity over there.
Okay, Sachin, absolute pleasure having you on a day like this and trying to kind of contextualize how you're viewing markets. Thanks so much for coming in and speaking with us.
Thank you.
Okay, and viewers, what we'll do is slip into a very short break. We'll continue coverage on the other side. You want to stay with us here on ET Now, more action to follow.